What's happening, family? This is the second and last video for the day. All right. So what we're going to talk about is banking and budgeting. All right. Now, budgeting is something I talk about all the time. It's super important. I don't care who you are. I don't care what you're doing. If you're not managing your money, you ain't making money. You're losing money, right? Anything that you want done well, you must manage it. If you want to have good health, you need to manage your health. If you want a good diet, you need to manage your diet. If you want a good mental, you need to manage your mental. Anything that you want to do well, you need to manage it, period. There ain't no ifs, ands, or buts about it, no way around it. If you're not managing your money, you're doing something wrong. Now, if you don't want to make a profit, right, don't manage your money. If you don't care, if you want to live paycheck to paycheck and just do whatever you got to do when you got to do it, don't manage your money, right? But if you want to make money, if you want to keep your money, if you want to have money, you really need to manage it. Problem is this stuff is not taught. That's why I do what I do. Financial education is almost zero in this country. I'm going to put some links up so you can see what I'm talking about. There is absolutely, I think there's like maybe one state in the whole country that requires any type of money management courses to be taught in high school. And I think there's only like one, my bad, people messing up my video. I think there's only like one semester that's required of any kind of money management. So a lot of people don't have it, right? I know I wasn't taught this. You know, I had to get this going to accounting classes and stuff like that. That's how I learned this stuff, right? So it's really important. Now, before we get started, I want to make sure you understand that every single business around the world is set up exactly this way. And what I try to explain to people, and I will tell you again today, you are a business. You have assets, things you own. You have liabilities, things you owe. And you have expenses, food, okay? The things that you need to keep going. Those are your expenses, right? Now, if you want to make a profit, then clearly you'll see that you're a business. Imagine McDonald's not managing how much they spend on French fries. Imagine McDonald's not thinking about how much they're spending on labor. Imagine McDonald's not creating some type of advertising budget to figure out how much money they need to spend in order to make money. They couldn't survive as a company, and neither can you. So you got to get serious about this stuff, okay? It's very, very simple to do this. I've talked about this over and over again. It's simple as keeping track of your money, keeping track of how much you have coming in, keeping track of how much you have going out. Now, if you're spending a lot of cash, it's really hard to keep up with cash, really hard. Unless you want to write everything down and keep a bunch of receipts and stuff like that, it's super hard to keep up with cash. What I suggest is debit card, credit card for everything. Okay? That way, all your transactions are on paper and you can see those transactions for years in the future. All right? Now, what we got to talk about is, in order to make this happen, we need to talk about banking. Okay? The banking in this country is good. It's good, but not great. Okay? And the people at the banks don't know anything. All right? You think that the personal bankers are some type of financial professionals, but they're not. They're basically tellers that's gotten promoted. They don't know anything. So don't expect them to know anything. You have to know what's going on, and you have to go in and you have to manage this stuff. Now, I provide these services sometimes for free, right? Where I will go into the bank with you and I will help you set up your banking, right? Otherwise, buy me a nice meal. You ain't got to take me out. Just give me the money to buy me a nice meal. That's all I ask, right? And I don't mind doing this kind of stuff because it's super important, all right? So what I did was I illustrated a little something here to help make the point. I'm at the back way out. All right, first things first, you need a deposit account, okay? Why do you need a deposit account? You need a deposit account because if you have a bank account, like many people do, and you have one account, what's happening is that you have all your money in one account. You got money coming in, you got money going out. And it's really hard to keep up with that. 9 times out of 10, you're probably just looking at your account, seeing what the balance is, and then deciding, oh, well, I got X amount of dollars, so I can do this. But then you screw up, and you got too much money coming out, and you get hit with all kind of fees, all right? Here's the way you stop that from happening. You simply segregate your accounts. Again, this is called account segregation. This is the way every business is run around the world, okay? You have to do this, all right? So this is especially if you're self-employed, especially if you have some kind of business going on. Please do this, okay? This is something I yell about all the time. So anyway, deposit account, okay? This account is going to have a routing number and account number attached to it, right? You don't want anyone other than the people that pay you having this routing number and account number, because this is where all your money is coming in. Fraud is real, and your money will get snatched quick if everybody around town has your routing number and account number with the account that has all the money in it. Okay, now, once you have your money in your deposit account, what you're going to do is you're going to figure out what your liabilities are. What are liabilities? Liabilities are those things that you're going to pay every month without fail, and you have a really good idea about how much those liabilities are. You know how much your rent is going to be month to month. You know how much your mortgage is going to be. You know how much your phone bill is going to be. You know what your internet bill is going to be, right? Those are your liabilities. Once you know how much your liabilities are, you simply transfer money from your deposit account to your liability account. You can do this once a month, twice a month, 3 times a month, whatever works best for you. And if you need help with that, again, holler at me, I can help. Now, once you transfer money into your liabilities account, right, you're going to have some money left over. Of course you are. Hope you are, because your liabilities should never be more than about 50% of your income. Now, I always understand if your liabilities are 60, 70, 80%, I get it. But ideally, you want those liabilities to be 50% of your income. That is the ideal situation. Okay? All right. Now, after you have the money transferred into your liabilities account, and I actually illustrated this incorrectly. I'm going to show you with my finger here. You're then going to transfer money from the deposit account, boom, into your expenses account. Now, expenses are going to be those things that you don't necessarily pay every month, those items that change month to month, okay? Or more importantly, your expense account are going to be those expenses that you want to control and manage. Because remember, again, liabilities, they're super important. Those are your bills, right? Expenses, those can change. I'm going to give you one example. My personal expense account is food. That is my personal expense account. What I'm doing is I am closely managing my food expenditure. So I have a certain amount of money being transferred from my deposit account into my expense account or my food account, okay? This account is connected with a debit card, right? And on the back of that debit card, I have written the word food. So that debit card is only for food. And I have a certain amount of money that I'm transferring from my deposit account to my expense account to only be used on food. This account does not have any overdraft. So what that means is once the money is gone from this food card, I don't have any more money for food. I just got to deal with that, okay? That's called monetary discipline. All right. Now, again, I illustrate this incorrectly, showing a flow, right? But from your deposit account, if you have savings, because remember, we want profit, guys. That's the whole point of doing this. You know what your liabilities are. You can control your expenses so that you have money left over. The money you have left over is going to go where? Boom, into a savings account. Now, this savings account, I'm going to suggest be something like an investment account, a brokerage account, an IRA account, something that would allow you to make more money. Do you understand me? Now, this savings account, like I said, can take on many different forms. Personally, I have 2 savings accounts, okay? I have one account that's tied to a credit card, okay? And the way I have it set up is I have money that's deposited into this account, and there's a credit card attached to this. I use the credit card, right? And then every month, I take some of the money from the savings account and I pay on the credit card. I don't pay the credit card off. Why not? Because I want to build my credit with that credit card. So I pay on the credit card, so I'm charged interest. I don't ever pay the credit card off, but I have enough cash in this account to pay the credit card off whenever I want or need to. Now, in an emergency situation, do I have cash that I can take out of this account? Yes, I do. That's the purpose of credit, right? But you want to make sure you always have enough cash in here to cover your credit card. You never want to spend money on a credit card that you don't have cash to back up, okay? So that's it. It's really that simple, right? This is the very simple way to manage your money. Everyone can do this. Depending on your bank, this doesn't have to cost a whole lot of money. I pay, I think, $12 a month for this exact situation, okay? If you are a business owner, same thing, segregation of accounts. Again, deposit account, right? Liabilities, expenses. Oh, and if you're a business and you pay payroll, then you want to have a separate payroll account. Why is that? Because your people are going to have the routing number and account number on their checks. You do not want Tom, Dick, Harry, and Jane to have your routing number and account number to an account that has a bunch of cash in it. You want that account to only have enough to cover payroll. So that's a separate account for payroll. And then you have a savings account. This can be a 401k. It can be a SEP account, right? Something that allows you to make money with the money that you are saving. All right. Another thing that I did not illustrate here, and I'm just going to describe this, okay, is what's called cash flow. And what I'm going to do is I'm going to actually pull up, because I did this, I do this for clients all the time. This is part of the bookkeeping that I do. And let's see if I can pull it up real fast here so I can get this video done. All right, so I'm gonna blow this up so you can see. All right, so this is what's called a cash flow statement. All right, now what you're seeing here are deposits, withdrawals, and ending balance. Okay, everyone's bank account has this. It takes about 5 minutes to go through your 12 months of bank statements and set this up. Okay, here's why this is so important. Number one, you want to make sure that your deposits and your withdrawals, okay, average. Do I have the average? No, I have the average down here. Okay, so this is an average. Okay, so deposits are average because every month you see the deposits change. Some months you get paid more, some months you get paid less, right? You have to be able to average this stuff because that is the only way that you can budget. You cannot budget day to day. You have to take a long view approach, okay? So I don't care that you made $7,000 in April. You can only budget to have $48.93 in your account every month. You understand what I'm telling you? I don't care if you made $7,000 in April. I don't care if you made $5,000 in May. You only make $48.93 a month. That's how much money you make. Okay, that is your monthly average. Okay, withdrawal. I don't care if in March you only spent $3,600. Right? I don't care because guess what? You're really spending $4,300 a month. That's how much you're spending. Okay. What does that mean though? It means that you have a certain amount of money left over every month. That's good. That's called positive cash flow. Here's the problem with this though. See this ending balance? This ending balance is the balance that is left over in your account every single month. Okay? See this? Now this changes month to month depending on your deposits and your withdrawals. Of course it does. Here's the average. The average is $10,970. What this means is this is your cash flow. Okay? This is what makes Walmart so good. This is why they don't care about taking products back because they have a large cash flow. This is the amount of cash that you have on hand 24/7, 365. That cash is always there. Sometimes you don't see it, okay? But it's there. I'm going to show you, just because these are larger numbers, I'm going to show you a smaller number here. Cash flow. Here we go. All right, here we go. This is important. Now, this particular individual has 2 bank accounts, okay? And I will tell you right now that he also had overdraw fees. Why did he have overdraw fees? Because in one account, he may be zero. He may be negative. In the other account, he has cash, okay? That is an issue because when you look at the ending balance of both accounts, every month, he has cash sitting in there. So there should never be a reason for him to be paying all these overdraft fees. He paid $1,000 in overdraft fees, okay? Here's his cash flow, $757. This is the amount of cash that's always in his pocket all the time. But you cannot see it because, see, it changes. See, it changes. Now, what you want to do is you want to get this amount. You want to put this amount into a savings account and allow that money to make money for you. Because right now, it's sitting there doing nothing. Idle hands or the devil's workshop. Idle money is even worse. Put your money to work. Make it work for you. If it ain't working for you, you losing. All right? Inflation is real. Inflation is real, y'all. So, again, this is a very simple thing that you can do. It's called a cash flow statement. Every business, every individual, simple. 12 months of bank statements, deposits, withdrawals, ending balance. That's simple. If you have a credit card, then you want to add interest onto that too, right? That way you can monitor what your interest is. You need to know exactly how much you're paying in interest. It's really important. I have one with interest on it, but I think this video is going too long already. So anyway, just want to reiterate, okay? So we're talking about budgeting, we're talking about banking, okay? And one of the easiest ways to budget is through your banking, all right? If you only have one account, like many of you I know do, it's really hard to manage that. It's really hard to manage that. You know, what are you doing? Looking at the balance and saying, oh, I got $100. So no. You need to segregate that stuff. Also, too, like I said, if you have a debit card attached to your one bank account, you got all your money sitting in one account. And everybody and their mama got access to that debit card because you sliding it everywhere. You sliding it everywhere. You putting that number online. Everyone at your bank has that account. You know what I'm saying? Your job has it. Everybody has that. So, no, man, you need to segregate that. The account that you're paying your bills with, the only money needs to be in there is money for your bills. Don't need to be no other money in there. For what? It's for bills only, right? If you have an expense account for whatever reason, mine is food. Maybe yours would be something else. Maybe you want to manage your hair and nails. Maybe you want to manage the money you spend on your kids. Whatever, right? You need to have a separate account to manage that, to closely monitor it, and allow yourself only a certain amount of money every month or every week or whatever to be spent on those things. Okay? If you're not putting limits on what you're spending on what, then you are not managing money. You're just blowing it. Okay? And we got to get to a place where we are able to manage our money, to save our money, to see some sort of profit, so that at some point, when you are no longer able to make money, you have money. I'll say that again. Financial freedom is simply this. Being caught up on your bills for the month feels good. Knowing that all your bills are paid for the whole month, that feels great. Wonderful. And cash left over? Oh, best thing ever. Being caught up on your bills for 3 months in advance feels even better, does it not? Nice. For the next couple months, every dollar you make is yours. Do you understand me? Every dollar you make is yours when your bills are caught up for the next 3 months. And I'm talking about everything. I'm talking about food, lights, rent, everything. For the next 3 months, caught up, you good. Every dollar you make thereafter is yours in your pocket. Do what you want with it. Okay? Having your bills caught up for a year. That's nice. That's nice. Now you're looking at some real freedom. Okay? Having your bills caught up for 10, 20 years, that is retirement. Okay? That is retirement. That's saying that it doesn't matter what I do. I can do whatever I want to do. If I want to lay here naked and do nothing, I can do that for the next 10 years because my bills are paid for the next 10 years. Okay? That's financial freedom. Not having to worry about whether or not your bills are getting paid. Not having to worry about when this is going to happen and when that's going to happen. Because it's already done. But the only way you can get there is to manage your money. It's the only way you can get there. It ain't going to happen no other way. Don't expect to get healthy if you're not managing your health, if you're not managing your diet. Don't expect yourself to get strong if you're not managing your workout regimen. Don't expect yourself to get smart and knowledgeable and wise if you're not managing your knowledge intake. If you're not managing your time. It's not going to happen. Don't expect your kids to be great if you're not managing your kids. You got to do these things. Okay? From me to you, I holla.